Welcome back, traders. If you are looking to level up your day trading strategy and make better, more informed decisions, then this video is for you. We are diving into pivot points, one of the most powerful tools you can use to predict market movements and perfect your entries and exits. All right. In this video, I'll be showing you how to use the best pivot points for day trading so you can spot key support and resistance levels with accuracy and trade with confidence. Whether you are trading Forex, stocks, or crypto, understanding pivot points is essential for boosting your success. Now, before we dive in, don't forget to like, subscribe, and hit that notification bell so you never miss out on new tips and strategies. Okay, let us get started. All right, let us begin by talking about what pivot points are and why they are so valuable for day trading. I'm just going to add the pivot point indicator right now. Okay. All right, here we go. So in its simplest form, a pivot point is a technical indicator that helps traders identify potential turning points in the market. It is used to predict where the price might change direction. Okay. Pivot points are calculated using the previous day's high, low, and close prices, which gives you a reference point for the current day's trading session. The primary idea behind pivot points is that the market has a tendency to trade around specific levels, and those levels often repeat each day. So if you can identify these levels early, you can predict where the market is likely to head, helping you make better decisions on where to enter and exit a trade. Now, let us break down the key components of pivot points and what they represent in day trading. When you calculate pivot points, there are several levels to pay attention to. The first is the PP, the pivot point. All right, the pivot point. The pivot point itself, right? The P level, the pivot point itself is the most important level, and it represents the market equilibrium for the day. Okay, this is calculated by taking the average of the previous day's high, low, and close prices. The pivot point is the primary level where prices are likely to hover around. Okay, then we have support levels 1, 2, and 3. Okay, these are the price levels S1, S2, S3. They are the price levels below the pivot point that indicates potential support levels. If the market is falling, traders expect these levels to act as price floors where the market might bounce back. All right, then we have resistance levels R1, R2, and R3 more importantly. Okay, on the flip side, the resistance levels are price points above the pivot point where the price may struggle to move higher. So these are key levels where prices are likely to reverse or slow down during an uptrend. Now let's just break down how you can use these levels in your day trading strategy. Okay, to start using pivot points in your day trading strategy, you would first want to understand how to interpret the pivot point and the associated support and resistance levels. So these levels help you determine potential entry and exit points. Here's how you can apply them. For your entry points, when the price is above the pivot point, it suggests that the market is in an uptrend. So you can look for opportunities to buy as the price approaches resistance levels R1, R2, and R3. If the price breaks through a resistance level, it could indicate a continuation of the uptrend, and you may want to enter a buy trade. On the other hand, when the price is below the pivot point, the market is in a downtrend, and you can look for opportunities to sell as the price approaches support levels S1, S2, and S3. Okay, if the price breaks through a support level, that may indicate a continuation of the downtrend, and you can enter a sell trade. Okay, then for your exit points, once you've entered a trade, use the pivot points to help you decide where to exit. If you are in a buy position and the price hits R1 or R2, okay, you may want to consider exiting or tightening your stop loss. If you are in a sell position and the price hits support S1 or S2, it could be time to lock in profits or close the trade. So here are a few practical tips to enhance your use of pivot points for day trading. First of all, ensure you combine with other indicators. Pivot points are powerful on their own, but they become even more effective when combined with other technical indicators like RSI or MACD or moving averages, etc. Okay. For example, if the price is approaching a resistance level and maybe the RSI is showing overbought conditions, it might be a signal, it might signal a good opportunity to sell, right? Also, use multiple time frames, okay? Pivot points are most effective on shorter time frames, like the 15-minute chart. Okay, like the 15-minute chart or the 30-minute chart for scalping or day trading, right? That's for scalping or day trading. However, it's a good idea to also check higher time frames like the 1 hour or the 4 hour charts to see the bigger picture and confirm the trend. Okay. Also, ensure that you pay attention to market sentiment. In volatile markets, pivot points can work great for predicting turning points, but always be aware of market sentiment. If there is big news or a major announcement, pivot points might be less reliable as price action could be more erratic. So always be cautious during news events. Now to wrap it up, pivot points are an incredibly useful tool for day trading, helping you spot potential support and resistance levels that are crucial for entering and exiting trades with precision. The best part, they are simple to use and can be applied to any market, whether you are trading Forex, stocks, or crypto. If you haven't already, make sure to like, subscribe, and click that notification bell so you do not miss out on any future trading tips. I would love to hear from you. Okay, how do you use pivot points in your day trading strategy? Drop a comment below and let us talk about it. Thank you for watching, and I'll see you in the next video. Happy trading.